Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden in plain sight within corporate filings. Today, we're diving into a company that might be on the verge of a major shakeup. Our focus today is Bayview Accession Corp, and their latest report is essentially a flashing neon sign screaming trouble ahead. The date here is pretty important, the 19th of February 2026. This report is all about a rather unpleasant piece of news from the Nasdaq stock market. This company, Bayview Accession Corp, is facing a potential kickoff from Nasdaq. And no, this isn't a surprise party. Let's look at what they have listed on Nasdaq. They have units, which are basically a bundle of one ordinary share and one right. They also have just the ordinary shares by themselves, and then the rights, which give you the option to buy a fraction of a share. It reads like a financial puzzle. Now, the company is checking a box here saying they are an emerging growth company. This usually means they are newer and might have some temporary flexibility with certain rules. Okay, so here is the juicy bit. This filing is all about a notice they received regarding delisting. That means Nasdaq is threatening to remove their stock, their shares, from trading on their exchange. Whoa, so they officially got a notice back in August of last year about not meeting a rule called the MVLS rule. This rule says they need to have at least $50 million worth of their stock in the market. Think of it like a minimum financial threshold Nasdaq sets. And now here is the bad news. On the 19th of February of this year, they got another notice. Not only have they not fixed the first problem maintaining that $50 million market value, but they now have more problems. They are also failing to meet the minimum requirement for market value of publicly held shares, which is $15 million. That means not many people are actually buying and selling their shares. On top of that, they missed the deadline to hold their annual shareholder meeting. Imagine forgetting your own birthday party, but for a company, Nasdaq has a rule for that too. Because of all these missed marks, Nasdaq is saying, you are out. Unless they appeal by the 26th of February. If they don't appeal, trading stops on the 2nd of March and their stock gets officially removed from the Nasdaq. That is a big deal for any company. But it is not all doom and gloom just yet. The company plans to fight this. They're going to ask for a hearing with a Nasdaq panel. If they do this, it pauses the delisting process, giving them a chance to plead their case. Still, the report is very clear. There is no guarantee they will win this appeal. It is a long shot. Now, like many companies, they've included what is called forward-looking statements. These are basically guesses about the future, using words like believes, expects, and plans. They're warning us that reality might be different from these hopes. They're explicitly saying there is no guarantee they'll succeed in their appeal or fix these listing rule problems, and they remind us that they don't plan to update these statements if things change later. Unless the law makes them, it's their way of saying, don't hold us to these predictions. This report is pages long, but really boils down to one critical issue. And finally, we have the signature. This confirms that someone in charge, in this case, Xin Wang, the chief executive officer, is attesting to the accuracy of this report. The company name, again, Bayview Accession Corp. The date they signed it, the 20th of February 2026. Just one day after the notice from Nasdaq, they're clearly trying to act fast. Looking at all of this, Bayview Accession Corp is in a precarious position. They're an emerging company that is struggling to meet the basic requirements for being listed on a major stock exchange like Nasdaq. The fact that they've failed on multiple fronts, market value of their stock, market value of publicly traded shares, and even a simple annual meeting suggests deeper issues. It's not just one bad quarter. It's a pattern of underperformance or mismanagement that is leading to these listing problems. The biggest risk here is the delisting itself. If they can't appeal successfully, their stock could become much harder to buy and sell, significantly reducing its value and liquidity. This will impact their ability to raise future capital too. Companies that get delisted often struggle to recover. On the flip side, their decision to appeal shows they are fighting for survival. If they manage to convince the Nasdaq panel, it could buy them more time to fix their business fundamentals. However, the report's no assurance clause is a major red flag. It signals that even the company's leadership knows the odds are stacked against them. In conclusion, Bayview Accession Corp is facing an existential threat to its stock market life. Their ability to appeal and convince Nasdaq of a viable plan is their only hope right now to stay listed. It's a high stakes gamble, and based on this filing, the odds are not in their favor. Alright, that is our breakdown of Bayview Accession Corp's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they can pull off an appeal? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and community discussions. Thanks for watching. See you next time.